Hello my friends, Rocky Outcrop here, Bitcoin and Ethereum technical analysis. Going to keep it nice and brief today, and the way I'm going to do that is by using a special guest. Yes, that's right, you will definitely know who they are. I'm super excited about it. I hope you're excited too. Let's dive on into the charts. Well, here we are back in the charts. I'll just introduce things as they stand currently and what we'll be talking about, and then I'll let the special guest take over because he has the skills and certainly has the license to kill when it comes to technical analysis. You'll be wondering, who could this special guest be? Well, let me tell you, there can only be one, and his greatest achievement perhaps ever was to be the only person to have ever escaped from Alcatraz. Interesting stuff. I'm sure you know who it is already with those clues, but anyway, let me introduce what I want to talk about. We have this ascending triangle on the go. I discussed this to death in yesterday's live video. You should definitely watch that. It was extremely educational. I honestly, there's no value that's in any video on YouTube which comes remotely close to what we did in yesterday's live stream. It's ridiculous. You should definitely check it out. But anyway, yeah, this is what we were looking at, this ascending triangle. We could be in the throes of breaking outside of this zone for now, but what do we see? Well, we see that there has been an increase in volume on average, and that it has gone up, a bit. But what we're looking at when we came up and tested this last time was bigger candles here at these points. For instance, on the initiation area of the ascending triangle, just after our rise up towards these areas, we had bigger volume candles. Then here, when we tested the area, we had bigger volume candles, and then here we have lower volume candles whilst we're having this breakout. Makes me think that maybe what we should do here is reanalyze this slightly for now, for today's episode, and I'm going to throw over to our special guest to do that. We also have these white crosses on here. As you can see, they're actually lining up with the lower end of the ascending triangle currently where we are. I think from the perspective of an ascending triangle, if we were to come down to those lower ends, it would be wise probably to consider a short to medium term reversal pullback situation happening in the markets. So we will look at that, and there's a couple of reasons for that. Of course, the special guest will cover that for us as well, and then we'll jump over and take a look at Ethereum. I may have to take over from the special guest at that point because I'm not sure how much our special guest has been looking at Ethereum lately. So anyway, no further ado required here. Let's just let the special guest take over. And yes, well, if you didn't guess who it was earlier on, he is, you will be kicking yourself. This is a man who requires no introduction. Reports of his demise were, of course, very much wrong because he's living here with me and will forever live on with me. He is definitely a hero of mine and can never ever die. I would love to introduce to you my fellow countryman, the person from the same city that I am from, and of course probably one of the coolest cats ever. That is, of course, our friend Sean Connery. Hand it over to you, Sean. You just take it away from here. Well, thank you very much, Rocky. I really do appreciate the flattering introduction that you gave to your community there for myself. I'm very happy to be a Rocky Outcroptician as well. And yes, we are going to be looking at a few things. Miss Moneypenny earlier on told me about a wedge potential on the chart, so I thought I would do that for your audience today. And I will be using this special tool that Q from the James Bond movies gave me back in 1979 for doing technical analysis and managing my positions once in a trade. Let me remove this, I hope you don't mind, Rocky. I'm going to remove this ascending triangle pattern that you've drawn on the charts here and replace it with a wedge. Let me just get up the options here and make sure that this wedge is fully visible for people. Okay, we've got a nice colour on the go. Rocky, I like the blue you've used there. It reminds me of the blue in our flag, of course, the Scottish flag, the greatest flag known to man. That's a little bit thin though, wouldn't you say? Let's make this a bit thicker and draw in this top line here. And then we'll draw in a lower line as well, taking these wicks from the lower edge and drawing up here, actually coming in again where we saw the lower line of that ascending triangle. So the lower line remains important, and as Trade Spotting said in yesterday's video, it is indeed important to remember that when you're looking at an upward pattern like the ascending triangle, it is important to put more significance perhaps on the support than on resistance, because as we can see here, the evolution of this ascending triangle could potentially form a wedge being a far more bearish pattern, catching people out who were going too heavy, too deep, too quick with any movements outside of this zone, this lack of volume that we're seeing just now, especially here as this latest new candle and it's being red and dropping down the way does not look good for a breakout of the ascending triangle. So much so, I'm going to remove your measuring stick from there, but I will remind people that if we were to have a measured move towards the top side here, I'll let you take over for this second, Rocky. Yeah, if we do have a measured move towards the top side of the ascending triangle, we are looking up towards 17,300. And if we were to do a textbook measured move, 60%, we're looking up towards 16,600. Those are your two top side targets for now. We've already covered that in great detail. We don't need to. I'll just hand back over to you, Sean. Yes, thanks so much. So that's really what we're looking to at the moment. You'll also see that this 236 came in here at the line where the ascending triangle was before I removed it. And maybe I should have pointed that out. I apologise, Rocky, for not pointing that out before removing it. Instead, I just killed it. Here, so if we see a pullback down towards this 15,751 area, that lines up more or less with where we saw the top end of that ascending triangle, and movements past that then could take us on down towards the lower end here, where we have a stop and reversal point. The stop and reversal tool is what was introduced by my good friend J. Wells Wilder Jr. back in 1979. Whenever he came up with this, he was telling people about when markets are trending, how you would be able to manage your positions and know to not only stop but reverse and go down the way. So if we do see the prices drop down towards, I'll let Sean go there for a second. So if we do see the prices come down towards this area, Miss Moneypenny, then of course not only would we be challenging the lower line, but it may be wise to take a short. Let's just see how things evolve over the next period, the next several 4-hour candles. Of course, the trend will remain our friend at the meantime, but bear in mind that here on this high that we've had just recently on the RSI, that actually, because this has come in where it has managed to avoid having the bearish divergence compared to the high on the 9th, but looking back a wee bit to these highs on the 5th over here, that we can very much see that this upward incline that we've had in prices is overall slightly bearishly divergent. There's a funny little disconnect that happens here between this non-bearishly divergent piece between these two highs here, and if we were to then actually readjust this wedge so that it actually incorporates this other area over here, move it down slightly, then maybe perhaps in this area where it was not, where we had a previous high, which is then not bearishly divergent, it could be flattering to deceive by having not come up here and touched the top end of the wedge and actually just be part of the flux along the way. Interesting point there, interesting point. I'm sure you'll find, Rocky. Hold on a second. Yeah, Sean, interesting point there that you make about the structure with regards to the wedge and ascending triangle, the higher highs, and the divergence there with regards to looking back past the previous high here, which was very narrow, and instead looking over towards the most significant area with regards to highs and lows on the indicator. It says down here that I've been recording for 8 minutes. I wanted this episode to be shorter. I've kind of said everything that I wanted to say. Let me just introduce this so Sean Connery doesn't have to go to the effort. By the way, thanks, Sean. You've been really great on this episode so far. The parabolic SAR, look it up yourselves. One day I'll make an episode discussing this in detail and how it's calculated and everything else. Just wanted to point out that currently where we find this parabolic SAR stop and reversal point coming in here is at this 15,619 area. Crucial, bear it in mind. Aye, that's going to do us for this analysis for today. Don't really need to look at the EMAs or anything else. Just suffice it to say that that's where the 18 EMA is coming in at as well. Breaking down below that EMA gives you a confluence of a few things. One would be that you wouldn't be experiencing a fake out. You would probably having closes, because we'll be talking about closes here. So there'll also be a close below the 236. It would be a close below the 18. It would be a stop and reversal point for us. And of course, then we would then need to manage our trades thereafter using the SIP. Go ahead and look up that information on the textbook if you want to, in terms of our significant previous price point in the previous day. So we'll have to see how this this period, or the previous period, pans out. We would probably have to be using this sort of 16,170 area as our stop for us if we did initially turn around. Pardon me on that one. Cool. Quick look at the CMEs. This never looked like an ascending triangle in the CMEs, ever. If it looks like anything right now, then just like kind of in this structure here, if it looks like anything right now, that's more what it looks like than anything else. We are right here talking about this line that we were, this challenging this line that we were at yesterday. I should possibly move this Fibonacci tool up a little bit. Where's my bit for it? Here? No. I'll just move it up real quick. Come on, where are you? I'll move it up that way and then fix the bottom. Okay, so 15,450 with regards to the CME prices, and that lines up perfectly with that stop and reversal point there. So we can consider this zone to be fake outs from this wedge that I've just drawn in. Perfect, fantastic, full of insights, educational, up the wazoo, fantastic. Let's take a look then quickly at Ethereum. Doing what we thought it would do, doing what we thought it would do, doing what we thought it would do, everything perfect, everything matched up perfectly with the live video yesterday. In fact, it couldn't have been better. Absolutely wonderful, fantastic, unbelievable technical analysis. Sorry, I know that that's not very insightful for you, but yesterday's live video, it's just exciting to see just how perfect all of that technical analysis was. We're below the 236 here at 464. Down here, so long as we're below 464, then of course, 457 is and 450s is a target. We've actually come in and done both of those today. We spoke about that in yesterday's video as well. The next target thereafter remains at 444. By the way, 444 is the next target. That's where it remains at. Coming in here with a retest of this symmetrical triangle. Too many lines on here for now. I know there is. That's fine. No breakouts happening in terms of volume, all that good stuff. Support and resistance though, you can remain support and resistance, stop and reversal. You would remain in a long position until we actually push down past that 618. Is this a coincidence that we see things lining up like this, where you could come in for a 618 reversal, then continue on with the prior trend, as is the reasoning behind the Fibonacci tool, and seeing this parabolic stop and reversal coming in, calculated by our friend J. Wills Wilder Jr. below that point, allowing a retrace down there for long-term positions if we were to have a parabolic move to not be stopped out, and that's where the 56 or the 54 exponential moving average comes in at. Do I find that a coincidence? I certainly do not. Here we are looking at the Ethereum Bitcoin pairing then, and we see, what do we see here? It's come back down to that 2828 level. It doesn't want to leave me alone. The 28s. It's going to haunt me forever. What was our low today? 2837. Well, there we go. We came up towards this top area. Currently, the parabolic SAR is telling us that we should be short. We wouldn't be stopping out of a short until we got to the 0.03 area. Yep, cool. That's also a pretty decent target for us towards the top side, as it has been, as we experienced there actually just on the 11th of November anyway. Oh wow, we did it. So the 11th of November, what was that, yesterday? Right? Was it yesterday? Just double check. Yeah, yesterday we hit the target we spoke about hitting. So if you were trading this based off of our episodes, you've made money yet again. Value never stops with this channel. Currently we're looking at being in a sort of short zone, and we've come into this key area of support and resistance that I've marked out on the charts, historically speaking, already, where you've got the 50% Fibonacci retracement, and that's right where we are right now. Movements down past that could see us coming down towards our ultimate target down here that we've had on the charts for a long time. So if you're looking at this in the meantime, I suppose that you've got to be looking down to that 0.025 area, unless we see a reversal from where we are just now. So is this possible? Let's zoom on in and hide everything off the charts to get it to be clear. Low here, higher low. This low is lower than this low, but that's part of an upward structure. This is an upward trend, therefore, so this is the low, the high, the higher low, higher high. Well, actually no, this is the low, this is the high, this is lower low. What are we doing in terms of divergence? A little bit bearishly divergent when we came in for that high. That's makes sense. That was our profit taking target. Yeah, okay, so we're maybe going to actually want to take a look at a sort of small, oops, not a position thing, a small Fibonacci here from this low up to our high where our profit taking was. We're down there at the 50%. Those two 50% line up perfectly, and the 618 on this one, if you're going to push it any further, comes down to 27.98. So 28 to 27.50 sort of would be your zone there to look to, or let's say 0.028 to 0.0278 would be your zones. We could see a turnaround here. Is that possible? Moving averages doesn't look like it. Lower term time frames then for moving down the way. Lower term time frames, this low, lower than these ones. Is there like something good about this? Best you could say is that there's the potential for hidden bullish divergence between these lows, but this is just 1 point versus a point which is the final point in a downward trend, so that's unfair. So it's too close to say so. The downward trend has got strength to it. The best thing about this is that we're at this point here where you frequently see turnarounds, so it would be really easy to manage trades around this area, essentially, whether you're going long or short. The profit taking targets in terms of two of them, if you're looking down that 27.8 or else 25 area, would be your two risk reward areas if you're looking to kind of establish where you would stop out at. Parabolic SAR has us coming in there at 29.19 in terms of this 1 hour time frame. What about the 15 minutes? Maybe this is one of those rare occasions where it's worth it. Yeah, this would be this in terms of like if you are short in this, that would probably be a good idea to kind of stop out in one of these sort of areas, maybe at this 382, at 28.82, 2882. Yeah, that would be my point again. 2882 remains the significant number for us. Cool, nice one. Great episode. Thanks very much, Sean. You're welcome, Rocky. Thank you for having me here. Yeah, you're welcome. I loved you in the James Bond movies. You will never die. You're my hero here in Scotland, one of them anyway. And yes, of course, onwards and upwards. Thanks so much for tuning in. I'll catch you next time. Yeah, I hope you enjoyed the episode. Like, subscribe, all that good stuff. Share it with your friends. They'll love it. youtube.com/Rocky Outcrop. See you next time.